Welcome to Grow with Purpose. This is the Axiom podcast where we talk about things that real life business owners are dealing with. And we invite business owners and subject matter experts on the podcast to break some of this stuff down. And today I have a special guest, Jason Miller. Now, Jason, I'll tell you a little bit about him before I turn over the microphone, but he spent years helping business owners figure out one of the most misunderstood transition paths out there, ESOPs, Employee Stock Ownership Plan. Maybe you've heard about it, maybe you haven't. But Jason is currently a partner and a director of succession planning at Berman Hopkins. Before that, he helped build the ESOP advisory practice at Bank of America. So he's been doing this a while. He also hosts a great podcast, which is the way I found him, called The Journey to an ESOP, where he breaks down myths, mechanics, the mindset behind employee ownership in plain English. I'd really encourage you to look that podcast up, subscribe to it. He's got some great guests on there. And if you've ever wondered whether an ESOP could actually work in your business or if it's just another complicated buzzword, Jason is here to help us figure that out with you today. So welcome, Jason. Thank you for coming.
Joey, thank you for having me. That was a great introduction. Really appreciate you taking the time to explain that. I do want to say that the first step in the right direction is talking about employee stock ownership plans and not the other ESOP that some folks may think about or see when they go to research it, which is the employee stock option plan. So
okay. I didn't even
demystifying.
I didn't even know there were two out there, so that's good to know.
Yeah. There's a kind of a running joke in the broader community around those two acronyms, and where they show up are some very interesting places. But I won't bore you with those details today.
Well, the first question is, I think business owners may or may not have heard of it. If you start talking to a business owner, what are like the misconceptions or the things that they don't know, like right out of the gate, like the earliest education process with a business owner? Where do you start?
That's a really great question because it's an underappreciated option for owners to transition their stock. So the first thing that I typically frame up is when you're looking at options as an owner, you have to understand how many options are really available to you and what they could be. And I often walk through that, and just to provide framework and context. Everything works better in context. And so there's 7 exit options, and we can kind of go through those really quickly. You have your initial public offering, or you go public. You've got a strategic sale for someone in your value chain, or a vendor or a competitor, or something along those lines, where they're looking to grow strategically from the acquisition of your company and find synergies. Then you have a financial buyer, which is private equity, some other type of investor that's looking for a financial return. Then I skip over ESOPs for a minute and then look at the internal pieces, which is a management buyout. Can your key people purchase your company from you on terms that are acceptable and that are affordable? And you may have family in the business that you want to transition your ownership to. And we see multi-generational businesses that do that and have done that for hundreds of years in some cases. And then the last one is an asset sale, right? It's all that's left are the desks and chairs, and that's not really a viable option. No one really wants to end up there. My managing partner said, you don't want to die at your desk. And so moving back to the middle, like what is this other option? And it's an employee stock ownership plan. It's got elements of many of these different exit options. And of those 7, those are the broad categories. There's 7 ways out, but there are infinite iterations of those. Your deal, your transaction, your succession plan is going to look different than mine. And mine's going to look different than Jim's. And as we go around that, but if we can corral it back to, well, which of these makes sense, people go, oh, I didn't know there was such a thing as an employee stock option, or oh, I did it, employee stock ownership plan for me to transition my ownership at my level, my stock at my level. So the first is couching it into it's an M&A transaction. It feels a lot like it, and then now there's framework for that. The next thing is talking about, what does that practically mean? What is this concept of employee ownership? And really what's happening is you're creating a market for the shares of your privately held company. You're not having to find the market. You're not having to go and solicit, and you're not having to share your information with a bunch of people to see if they're interested in purchasing your company. And so those are some of the benefits, but you're literally creating a trust and a market for the shares of your company, and that trust is set up for the benefit of your employees. So one of those common misconceptions that gets answered in that explanation is, so I'm not selling it directly to everyone on my team, and they don't have to come in and buy it with what they can get out from underneath the mattress or the couch cushions or raid their retirement to buy my company from me. So when we think about a stock sale and a transaction, we are creating the market for your specific company, and the buyer is this trust being set up for the benefit of the employees.
Got it. I've never heard somebody say it that way, that we're creating the market. And we have business owners who go through all of those 7 exit. Well, not that. I'll take that back. We did have one that did an IPO. So we've covered all 7, and I think that when you go through, if you pick one of those, they're all painful. Right? So like we have 3 clients right now that are in the process. 2 are in the process of looking for a financial transaction. And so there is a market out there. All these private equity firms, like, they create the market, and the agonizing part of all of that is the due diligence period, even pre-due diligence, before you even get to a letter of intent where somebody comes forward and says, we have a price in mind, but we got to look under the hood before we make good on this offer. And it is a million questions answered 100 times the same way. And at some point, there's this term in the industry called deal fatigue that can happen on both sides. The company that is trying to get themselves sold certainly gets tired of it, and then sometimes the market gets tired of it. A lot of times, they don't have their house in order, and the market just says, you know what, we're out. Certainly those other areas I could go through, like family succession and the pain points that are experienced there. I could go through management buyout and the pain points that are experienced there. And just to kind of get candid for a second with people who might be considering, like, let's eat the frog first. What are the pain points as you see them in these kinds of transactions?
I love the way that you frame that. And with any transition, there's an emotional component, and there's an emotional tax in addition to the physical component and the physical tax of what do we have to do in order to be ready to sell, what's going to be required of me, of us. And you and I have been through that before from our seats, but most owners have never been through that before, and they're unlikely to ever go through it again.
Yeah.
Serial entrepreneurs accepted from that population, but these happen, and that's an element that I love to talk about, the friendliness of an ESOP transaction in comparison. And I use that term kind of broadly, but because the buyer isn't an individual, it's a trust document, as we've established, that's being represented by a trustee for the transaction. That trustee has a fiduciary responsibility to the beneficiaries or the employees, and they have standards of which they have to approach the transaction. When there's a standard set, then it gives us rules, and they're clear rules for each side to operate on, ownership and the sell side, and then the buy side being represented by the trustee. And in an ESOP transaction, that's defined as fair market value. And that fair market value is a standard of value, and it has a specific definition. That's basically, you have a hypothetical buyer, hypothetical seller. If they had all the same information available to them and were willing to enter into an agreement and an arm's length transaction, basically those are the components. We have to have that dynamic tension in there, and no one's operating under duress. then the fair market value is what we're negotiating toward. In comparison with what you mentioned in deal fatigue, is, where am I going to end up? And how close are we going to get? And then what's the structure of that going to look like? And you still have those components because you're negotiating on a stock, right? And the stock of your company. But they're not specifically trying to drive down a price to get a better return.
Interesting. Yeah, that's good. That's a great point.
And that lends not just a lot of confidence to the process, but alleviates a lot of the conflict and the stress of what you just described in a typical due diligence phase. Not to say that doesn't occur to some extent, but when everyone is approaching the same standard with wanting to make a fair deal at fair market value with the same information available, it eliminates a lot of the, man, maybe I could have gotten an extra X percent. Or I really should have held true on this particular piece because I feel like they're getting a better deal. And when I talk about financial buyers in comparison, it's like with real estate. I use this comparison a lot. You make money when you buy, not when you sell. And so that perception of, if I get a good deal on the front end, then I know that my financial return on my back end as the buyer is more assured. Not completely assured, but everyone wants to get a better deal. And in the ESOP transaction, because of those rules and dynamics, that burden of deal fatigue is less frequent and less intense just because of those dynamics.
When I'll go back to like a financial transaction, and you sit in these meetings or you're on these video conference calls, and whether they're talking to management or whether they're talking to the CPA firm who did the quality of earnings to kind of say like, hey, we've taken a look at this and we've made some adjustments so that you can be assured as a buyer that the financials are sound. Every question that gets asked, I'm listening to it almost from like a third party observer perspective, even though I'm asked to participate, but I'm always like, what's the motivation behind that question? Like in a financial transaction, there might be a motivation, but underneath that, maybe 2 or 3 layers deep, is always the financial return motivation, right? And that's the market you're jumping into. Mm-hmm. And so when you're talking about these transactions, or these conversations rather, we'll call it the negotiation conversation. And I'm assuming this is between the trustee who's representing those employees and the business owner who wants to sell the shares into the trust. How would you characterize that underlying motivation? Is it purely rule driven, like you said, where the trustee's like, I just got all these rules? Or like, give us a sense for what that conversation feels like if you're sitting in the room as a third party.
Let me back up a little bit. And we've mentioned a couple of things that are very, very important, and that's we're arriving at a value, and so you as the seller should kind of know what your value would be at fair market value in light of an ESOP transaction with all of these considerations, because that's different than what it would be for a financial buyer, mm-hmm. right? So the first is starting with that, having confidence in what the company can go to market for in an ESOP transaction. And then that would be our work. It's where we start with clients, is if the number doesn't work for you in the structure, then it makes no sense to continue down the path. So excluding an ESOP from your personal goals is almost as important as including it in your consideration. But that should come with some valuation work to get to that number in light of an ESOP transaction. Understanding that, because we do have to have an arm's length transaction, the trustee does negotiate on behalf of the employees. Part of the process is for them to engage with an independent valuation firm to get that same data that we talked about at the beginning. We have to have the same info for them to provide the trustee with a range of value based on that input. And so the trustee is looking to get a good deal for the employees, but they're not looking to get a steal.
Yeah. And we should, maybe for the audience, we should back up and say, you made an important point. Like the value, if I own the business and I'm considering an ESOP and I want to get a value, and I go, well, we were thinking about a financial transaction, and so we went out and had a CPA firm look at our books, and they did quality earnings, and we looked at the multiples that our industry is trading in, and we put the value here. What happens in those situations is that CPA firm may have what we call a lot of add backs. So, for instance, well, you guys are, you have a full-blown accounting department, and there's some redundancy in there, and we feel confident that anybody looking at this from a financial perspective is going to add that back. Or you guys, like for us, so we're a business advisory firm, so we help the business with the strategic planning and the execution. And they always add that back, right? Because the PE firms, like, they're not keeping us around. They're like, so that add back. So you may look at the books and you're like, we made $1.5 million last year, but by the time the CPA firm added all those things back, we made $2 million, and the market was going to value us at 6x $2 million, so we got a $12 million valuation. And you're saying, well, if you go ESOP, you're probably going to keep that accounting department. You're probably going to keep those experts who've been helping you grow the business, and so we're not going to be adding those back. So it goes back down to 1.5, and there might be some adjustments the other way, right? So there's some subtractions of things where you were underpaying yourself as the CEO, and we're going to have to promote somebody in that position. That's going to cost us an extra $50,000. So the valuation piece of this, owners have to understand it's a different formula depending on the market you're going to. A financial market is going to have a different avenue for that than an ESOP market. So
that's accurate.
So if we talk about, we've established value, or like say somebody's come to you and they've said, Jason, I'm thinking about doing this. You go, great. Let's get a realistic picture, because if it's not realistic, we should look at other options. You get the realistic picture of what the value of the business is worth. They say, I'm happy with that. And I want to come back to that. I've put a pin in it because I want to talk about something related to that. If I forget, you got to remind me.
I'll do my best.
And then you start down this process. You go out and you find a trustee. Trustee hires their own business valuation firm. Is that correct? And so they get a value. Now you're comparing, your number to their number, and that's where the negotiation starts. So is that kind of the context we're talking about?
Yeah, think about it as like a blind box. So we never see their work, they never see our work.
Okay.
And that's what creates that arm's length tension and the dynamic of the negotiation. So that's one element of the transaction that is a little strange sometimes, but the goal of it is to document the process that it was negotiated at arm's length within an acceptable range, that a fairness opinion is provided by the buy side team, and to substantiate the deal itself. And we didn't just do it over, on a bar napkin after a round of golf.
Right. Right.
Or I stated the value and forced you to buy it, or any of that. So the optics are very important related to that. One thing I do want to go back on, and it's related to the concept of the add backs in the valuation, and you mentioned some key pieces like, when we're looking at this for this type of transaction, that whole department's going to go away. And there's three things that I'd like to mention. The first one is thinking about preservation of legacy, and then the second is the kind of instantiation of the owner's vision or the founder's vision for the future. And all of that hinges on the fulcrum of the company yesterday is the same company after the transaction. That there's no new parties, there's no new ownership that's coming in to tell you what to do on an operational basis. They're not telling you how to change your name. Any of the things that may be instituted with that. But one of the driving factors for most owners is, I care about my employees, I care about their future, and I care mostly about how they're going to feel about working for this company after I'm gone, rather than working for someone else or doing something else or putting that at risk. And it really creates a bridge for recognizing we can't live forever on this side of heaven. And so what gets done is that owner, that founder's DNA is kind of codified, and then the leadership comes along behind it with an ownership mindset, because they do own the company over time. We can talk about mechanics in a moment. But they get to take that vision and really see it through. But on day two, nothing changes. It feels a lot like day one or day, 10,001 if we've been working for, a long, long time to get to that point. And that continuity is a crucial element of what owners are attracted to in an ESOP sale.
Well, you've inadvertently just come back to the thing that I wanted to come back to, because I was going to ask you, what are the motivations for an owner, given the almost, we'll say high likelihood that they would be able to get more money if they did a financial transaction and just said, I don't care about legacy. I don't care about the name on the sign. I don't care about the people who are going to be there maybe not day 3, but day 300, there might be some changes. What would motivate somebody to give up that additional buyout in order to pursue something like an ESOP? And you just answered the question beautifully. Like that is, if I were advising an owner, I would say, take it whatever that gap is and consider that an investment back into this business to preserve all the things that you just talked about. And I think that resonates with a ton of small business owners but there are the multiple transaction entrepreneurs out there that, they're like, that's not the game I'm in. I'm a builder, scaler, and then I need to exit so that I can have more resources to go build and scale the next thing. And that's a whole different ball game than building a small business that's going to have a kind of a legacy in a community.
No, you're absolutely right. And that's something that I tell clients often is there's no wrong answer. I'm not trying to convince you to do an ESOP because I need you to do an ESOP. I love the community. We could talk about the community if you'd like. I love what it does for that legacy and that vision, the impact that it has individually on the financial lives of the employees and the community. And that's why I do it. The stories are they're magic. They're really magic at the end of the day. And being a part of it and seeing it is rewarding for me individually. So I would love to see more ESOPs, which is why my livelihood is that.
That's something that, let's talk about community for a second, maybe from a couple of different angles, because I've gotten involved with different businesses, different advisors in this space. And I don't want to say it's a religion, but it's pretty close. I mean, you hear words like, there's a good friend of mine that for years and years and years, he was in the 401k administration space. So he worked for a big national 401k administration, third-party administration company. And he, late in his career, just kind of by happenstance opportunity, he became the ESOP guy at this organization. And he described it to me as, for 25, 30 years, I was in this industry and it took that long to find my calling. And he looks at this now as almost a crusade to bring this vehicle into the business world because he sees transformative impact. And then so there's a community of professionals that are staunch advocates for this because they've seen, they've seen the impact it has. But then I've also gotten to see the businesses that go through an ESOP. And there's a community of business owners, former owners, people who institute this, literal owners now of kind of like senior management team people who are staunch advocates for ESOPs. And then you've got so that might be the internal or cross company community, but then you've got the internal, very close-knit community of the employees within a particular company that are now owners of that company. So talk about those three communities from your perspective and how they've impacted you and how they've impacted the businesses that you work with.
I'd be happy to, and you'll have to keep me on track for all three. But we can start with the with kind of the professional community and working in finance, working in banking for my career. I've never been more welcomed by other professionals than within the ESOP community, and not just welcome like, hey, well, get on board, new guy, and drink the Kool-Aid and think about how great this is. proactively going, we're so glad you're here. How can we help you grow? What do you need from us? And there's fewer borders. Now, no one's giving up secret sauce or company secrets or anything like that. So I don't want to give the wrong impression about that. But even competitors would be like, oh, how to think about things like this, or what do you need to know? Just kind of ask us questions and figure it out from our perspective, because the community as a whole, I believes the more of us that are competent and capable, then the better all of us are. And that's an element that I love giving back to the community. I love doing the podcast and making information available so that more people can hear about what an ESOP is and what it means to them. And we have 6 seasons of nitty-gritty data on all the different elements of an ESOP. And there's a lot to cover. And having a place to access that, and having people that you can call and say, hey, I'm thinking about this. And I just need to get my head around it. That's welcomed and encouraged within the professional community, and not just, oh, well, if you don't know that, then good luck. That doesn't occur. So then you get to the business owners, and it's very similar. And each company is unique. Each set of circumstances is unique, and there's that concept of infinite iterations of an ESOP transaction and of an ESOP company. But within that, there are like qualities, and the largest one is that ownership mindset that we've mentioned. And there's little like it. And when that brings people together, they want to know, how can I contribute more? How can I do this better? What should we be looking out for? And companies are willing to share their stories so that other companies don't have to learn certain lessons the hard way. And this is what we did in this circumstance, and this was really unusual in whatever year 11 of our plan, and this is what we encountered, and this is what we realized if we had more forethought or more foresight, if we knew then what we know now, this is what we would have done differently. Those are the things that the community wants to share, because the success of not just the company, but then of the employees within those companies, it's kind of a unique club. But for how few ESOP companies there are, that camaraderie is great. And the employees, their stories are fantastic. And what we're talking about literally for them is a financial benefit that's structured as a retirement plan. And we all know about retirement security and the impending retirement crisis. Those elements are alleviated just for people showing up and doing their best at work. And their mentality and their kind of gratitude for that, and the stability that the ESOP benefit provides them and their family, enables them to bring their best self to work without worry.
Yeah, it's interesting that the gentleman that I referred to earlier who said he'd found his calling, that's one of the things he pointed to. He said, for years and years and years, I was trying to work with employers to try to increase enrollment in their 401k plans. How can we better educate? How can we make the process simpler? How can we put incentives in place and make this more tangible? How can we kind of give them a view of the future with and a view of the future without, so that they're motivated to invest in their retirement? And he said, we're still doing that, except we've taken the ability to grow that retirement and we've put it in their hands, literally 40 hours, 50 hours a week. They're able to kind of have a say in what that eventual outcome looks like. And I saw this in a group that went through an ESOP, and I saw what we would call baby boomer employees were the first ones to really start asking for, operating metrics. How are we doing? What's going on? Are we beating last year? And it made sense because they're the ones, that future is more immediate for them. And they're like, wait, we only got so much time. Like, we got work to do. Let's get busy. But then
Right.
you see, I think in trades, this is undersold. If you have a trade business that is an ESOP and it's a highly competitive market, we've all heard that for years now, and you have a young AC technician or plumber or HVAC technician, and you're able to sit in front of them and say, by the way, you know, after a certain amount of time, you're going to become an owner in this company. You know, in principle, this company's value is going to accrue to you. So if you help us grow, and there's multiple opportunities for growth that you'll see at any good company. There might be opportunities for supervisory positions or management positions or additional certifications. We want you to pursue all of those, but this is something that nobody in our market that we know about is currently competing with. So I think at both ends of the spectrum, you've got a great competitive advantage if you leverage it, right? And I'm sure you've seen it done well, and kind of some people have dropped the ball. So maybe I'll ask you, maybe to tell us two stories. One, which is kind of like this is what I love to see happen every day, and this is an ESOP done well. And I'd like you to share with us, what were the contributing factors, like before, during, and after? Before that transition took place, during the transition, what made it successful, and then especially afterwards, how did that work out in terms of the things that were done after to make success? And then we'll pivot over to one that maybe isn't a great story and learn some lessons from that.
I always like to start with the cautionary tale first.
Okay, great.
So let's do that. There's so many different avenues that I could take as you're talking. Like, what should we talk about next? Like, I can hone in on that. There's a lot of nuance to every part of your question and your statement, and that's twofold. The first is, that's one of the impressions that the professionals and business owners alike are like, this is super complicated. It's super complex because there's just so much to kind of understand and know. And my kind of preemptive answer to that would be, it's really no more complicated than everything else or any other type of transaction, but the discipline around that is usually larger and longer tenured and deeper. You have a lot of private equity firms, financial buyers, and processes that are set up around that, and there are fewer around the ESOP process that gives you the same level of confidence and clarity unless you're intentional about learning it. So that idea of complexity and complication, I do want to address directly. The other part of this is, you know, the motivation to make the sale and how that gets presented. If the benefits of the transaction are shareholder only, and I do this all the time. My team yells at me about it when I talk to clients. We've been spending however long we've been spending talking about ESOPs, and we haven't talked about the tax advantages that are phenomenal. And we can get into those in detail, but it's kind of like, oh yeah, by the way, you know, how would you like it if your company never had to pay income tax to the IRS again?
Yeah, I think a lot of businesses will be like, sold, just out of spite to the IRS. Let's do it. We're going that direction.
That's exactly right. But if that's the sole motivation and the level of detail and care around the setup of the transaction doesn't fit, then it's just at risk for not hitting the expectation of the shareholders, of the leadership team, or of the employees that are living there and working there. You know, I can think of a company that did a partial ESOP sale, so de-risking my personal wealth in a privately held stock by transacting for a minority stake to the ESOP. Right, when we think about, you know, creating the market and making the sale, because I'm not ready to leave, and I'm a young guy, and I'm going to ride this out, but I get these tax benefits. And it makes sense where we are to go through that. And that's this particular story's setup was de-risking my personal balance sheet because it sounded really great. And we fast forward 4 years, and it was the owner coming to buy back that minority stake. He's like, it just didn't work. And in asking around what didn't work, he's like, well, it was supposed to solve all of these problems with retention and with our growth and with the taxes, but all those other pieces that we didn't spend a lot of time on created a headache, and it's just easier for me now to go back and buy it back because it wasn't what I was promised. And we had a conversation around communication, and it was, well, how was this communicated to employees? Well, we gave them the summary plan description, and they got a statement once a year. And if you're not communicating the not just the benefits of the ESOP, but the potential of what it means on an individual basis, and it doesn't become part of your culture, that lack of communication is like lack of attention on a plant, and then it dies. So just having a benefit and just having a tax advantage as a seller, while they could be attractive, if they're not cultivated, if they're not grown and they're not communicated, then in that particular case, it's going to die. And there has potential to, not that it can't be re-energized or reinvigorated, but that's the cautionary tale. It's communication and intent.
Yeah, it's interesting to talk about communication, and you made a statement, it's not just about communicating the benefits. And I think one of the things that happens is, you say, well, I'm going to communicate the benefits, and I'm going to deliver that through an annual statement that shows your shares are worth more than they were last year. And different people respond to benefits differently. It's kind of like any sales process. If you just kind of go out and sell on features and benefits, you're going to miss a certain part of the market because that's not what's most important. One of the things that I think would be very important to communicate is also the responsibility. Like, you're an owner of this company now. You have certain responsibilities that you didn't have before. One, you have a responsibility to the person on the line or in the truck next to you because your performance now affects them, and vice versa. And you have a responsibility, you also have a responsibility to communicate this to the market. Like, if we really believe this differentiates us, why are you not talking about it to your friends and family when you're trying to recruit new team members? Or why are you not talking about it to customers when we're trying to differentiate ourselves and the level of care and craftsmanship we bring to the product because we own this company and we don't plan on leaving? And I don't know that owners or management teams give a lot of thought to communicating responsibility in that context because typically they're more accustomed to communicating your responsibilities in exchange for the paycheck you get. Correct. And it's a totally different conversation that, I would imagine they're going to need quite a bit of coaching in order to one, kind of change their mindset around how they should be thinking about that. But then how do you act? What are the words you actually use? What are the rhythms? What are the routines? What are the tools that you're going to use to make this real every day in the business?
You're absolutely right. And that it brings out a lot of different ways to approach that conversation and communication. And everyone starts at a different place. The first thing that I would say to any owner is, how can you summarize the benefit of an ESOP to a broader team in a financial way? It is a direct alignment of incentive for performance and responsibility to a financial benefit. So if I have a stock price and I know that I'm going to have that stock price valued every year, then I want the stock price to be higher next year than it was this past year. And my natural question is going to be, well, what can I do about that? And owners, founders, and selling shareholders and leadership teams should think about that in communicating, and they do, and with the advice of the community and other advisors in the ESOP space to say, here's how you communicate, not just here's your monetary benefit, but helping every new employee owner realize that their effort is directly aligned with the financial reward. So that's step number one in communicating that value. And it touches on other pieces around financial literacy. And what can you do as an owner today that might be a year or two or further out from any type of transaction, but for an ESOP transaction specifically to help prepare people to hear the message of alignment of incentives. And it's really financial literacy. What is a stock? What is an equity? What is a retirement plan? What is a budget? And getting people engaged in their own finances, instead of seeing the purpose of their work as a paycheck to accomplish financial goals. And ESOP is unlike anything else except for direct ownership in tying those two things together, my work and my purpose, now with my financial output and reward.
I love the opportunity that an ESOP gives a business, the responsibility, as you put it, to invest in the financial literacy of their team. Because you look at all the spillover benefits. You mentioned budget. I mean, if there's one thing you could do for your team members, it is educate them on the value of living according to a budget, of saving for the long term, of realizing that that statement I get every year is actually going to have a big part to play in my life after retirement. And you're talking about changing people's lives. That's really what we all wanted. I think as business owners, that's what we want to do. We want to change people's lives. That's what we think business done well is. But this is probably one of the most remarkable, underappreciated tools for doing that, just because it gives you so many opportunities to bleed into other conversations and other ways that you can help impact people.
You got it.
What's give us one of your favorite stories. Tell us about a company that's been through this and the effect it had on everybody involved.
I'm thinking about a couple different ones. There's always good places to start and then better places to start in sharing this. Here in Florida, we're very aware of Publix. Publix is the largest ESOP. And they employ over 200,000 people. My first experience with an ESOP was decades ago, as a financial advisor, and my client was a grocery manager who put his statements in his drawer every year. And he and his wife came by and said, we're thinking about hanging it up. Like we want to go live our best life. And I have a 401k, and then I've got this other thing. And it's like, I never look at it. I don't really know it. I don't understand it. And I need your help. So I was like, what is this? Like, I don't know what an employee stock ownership plan is, much less like how in the world do we get you to help with all the planning. And he brought the statements in and didn't realize that his 30 years at Publix had made him a millionaire.
Really? He had no idea. That's extraordinary. And
when we talked through that, he's like, I wish I would have opened up these statements a little earlier. And I was blown away by that like, what I want to know more about this. I want to know more. And Publix does a fantastic job of treating their employees extraordinarily well, and maintaining the image of their grocery store and their culture. It's a Publix culture, and you can say, this is what it's like when I walk in here. This is what it feels like to me as a customer, versus perhaps another grocery chain that isn't, that feels like a grocery store rather than, these things are different. And it may be subtle, but the more you investigate it, the greater it is. So that's on one end. And then the other is, it gets back to communication. How is what's most important? Is it a retirement balance? Or is that you are part of our family, our culture, and we want you to be part of this workforce, but this family of ownership. And there are countless. I can't even think of all of them in their life cycle, because ESOPs are 50 years old. Some are in stages of 10, 20, 30 years. It's what do we want to communicate to the people that have gotten us this far when we make this transition? And those that are looking to preserve the culture over even their own ego or legacy are the ones that are the most successful in the long run, because the questions that they ask and the decisions that they make while they are still on the board, while they are still in an executive management position post-transaction, are what's going to be best for my people, what's going to be best for the company. And then if it happens to be good for me, that's great. But it doesn't have to be, because I've already received my monetary benefit from the growth of the company. Now it's theirs. So it comes from me to we. And in doing that, that's what creates these millionaires and very successful ESOP companies, because the sustainability of the company comes first. And again, countless examples of that in the community.
I love that you hit on the absence of ego, because I think it's one of the things when we work with a business, the coachability of the CEO is everything in terms of having an impact. And the thing that is the antithesis of coachability is ego. And so you're pointing to one more thing that kind of there's this grab bag of characteristics or character traits that make long-term small business owners successful. And a lack of ego is a big one while they're operating a business. And you're saying lack of ego is also the thing that could make the next chapter potentially even more impactful than the one that you were leading the whole time. And this ESOP vehicle is a technical way to accomplish that, but underlying it is the same principles that you've relied on for the last 30 years, right? Put my people first, watch out for them, do what's good in the long term. Yes, I need to take care of my family, but feathering the nest is not what I'm all about. I'm about building something bigger. So I want to ask you one last question, and that is, among those 7 options that we started with, I think ESOPs it's almost like a process of elimination, right? Like, I don't want to go through the pain of a financial transaction. And, I don't need, I've taken good care of my personal balance sheet. I'm in pretty good shape. I don't have to max this out in order to maintain my lifestyle. I don't have, I don't have any family members in the business, right? I don't have a key number 2 who's got a bankroll or access to capital who could come in and buy it. I have a pretty solid management team if I stick around for a few years. Maybe ESOPs, is that the only option left, right? And what I would like business owners to consider is putting the good options on the table and saying, I would much rather business owners front run the ESOP as like, let's see if this would work first. Make an argument for that, maybe to a business owner who's like, I don't know, I've never done one, don't know anybody who's done one. I got 4 other friends that have gone the PE route, and I've got 2 brothers who've handed the business to their kids. This is foreign territory. Make the argument that why that should be one of the first considerations.
Wow. Okay. That's good. My mind's going to 2 different places.
Okay.
And my first one is answering kind of what you just mentioned, and just want to be direct about it, which is not every company has every option available. Mm-hmm. And my argument for evaluating whether an ESOP makes sense for you, despite the headwinds that you're describing of the peer pressure or family pressures or what you're comfortable with, what you've heard about, is give it the same level of energy and the same level of diligence in the beginning before ruling it out for what someone else may have said to you. And there are very common conceptions, whether they're misconceptions or they're just conceptions around ESOPs, are things that preclude many owners from taking the first couple of steps to figure out if it's going to make sense. And that's, you're never going to get the same value from an ESOP that you would if you went for a financial transaction or you found a synergistic buyer. And those options may not be available again to every business. And the delta doesn't have to be 2, 3, 4, 5x. There may be a delta. It may be a lesser amount. but there are other financial considerations in the structuring of an ESOP that not just the surety of execution, but the surety of repayment without excessive performance metrics required in a short period of time. So those pieces of it's complex, you're never going to get the same value as you would if you went this way or that way. Don't let that sway you from really examining it and saying, well, what? It works. It's out there. There are people that obviously love it for certain reasons. And is that going to be what sways me to do it? Just give the same level of effort in investigating that as you would for a financial sale. Understanding that whatever answer you come to that's right for you is the right answer for you. And you don't have to feel bad about not doing it or choosing something else after examining it, as I mentioned earlier. So the goal for us is to educate people and inform them and help them, again, include or exclude. Preferably include if it makes sense for them, because we just like to see more of them because of what they do to the community.
Well, that makes two of us. I would love it if this became, in 10 years, if this were as talked about as PE or strategic buyouts. I think that would be a great accomplishment for the industry and for folks like you in the community. And we'll do everything we can to support it. I really want to thank you. I also want to say, like, I would say we scratched the surface. We haven't even scratched the surface. We've put a fingerprint on the surface. If you are interested, please go to Jason's podcast, Journey to an ESOP, because he has subject matter experts on there. There were some of the best episodes I've listened to are where Jason is just sharing his heart for why he does this and his passion for it and why he does what he does. So definitely, if you are curious and you want to learn more, we will have all of Jason's contact information in the leadership guide. So the leadership guide gets published for every episode. It's usually about 2 or 3 pages. Our team goes through this episode, they listen to it fresh, and then they pull out the things that they feel like business owners or listeners to this podcast might want to kind of critically examine. So they'll build a worksheet where you can kind of work through some of the questions Jason's asked, some of the principles that he's outlined, and just take stock of your understanding, your interest. And by all means, if it makes sense to talk to Jason, reach out to us or contact him directly. We'd be happy to make that introduction and subscribe to his podcast. Jason, thanks again for being here. A ton of great information. Really appreciate your heart for what you do. And I'm sure the people that work with you feel the same way.
Joey, thank you so much. Really appreciated sharing today and being on your podcast. Thank you.